Hello traders, it's Thomas here from Vega FX, and today we're going to be covering over market structure, how to identify highs and lows in the market, and how to utilize this to identify where price is likely heading next. If you do enjoy the video, guys, it would be a massive help if you did like and subscribe. Not only does it boost my channel for YouTube's algorithm, but you'll also be able to see anything new that I upload. Now, without any further ado, let's get straight into the video, and I hope you guys enjoy. Okay guys, so looking at the chart by here, we can see that there has been a piece of structure made by here. You can see this because there was a break on this high, which was the Asian high or the Asian session high. You can see that price has come down, hasn't gone below this low because it's trending upwards, and it breaks out, causing this new high by here. So this actually becomes the new low, and I mean, some people would count this as low. Personally, I only count this as substructure, so it can't be as probable to determine if order flow has changed, but you can actually use it if there's significant imbalance. I will go through that in a future video, but this is the main low we're looking to break. Now, if this breaks, it means that price is actually going to potentially start trending downwards. It could be obviously a liquidity sweep, but it more often than not means that the order flow is reversed. So if we can see here, price has broken down. You've got this structure break. This, we'll wait for a reverse. There we go. So this now becomes the last low, and this is the last high. So now we know that price is likely to not come above this region by here, but continue downwards. And what is this left by here, guys? This is actually in balance. So you can see that this price action is actually moving very efficiently. This isn't. So this is an inefficiency or an imbalance that is likely to get filled if you did watch our last video. So we could have had an order block set by here. And if we had an order placed on this region, you can either set your stop there or 2 pips below. This is the 5-minute chart. Obviously, it'll be relative to your time frame. We can see price actually comes up, tags us in, and almost takes us out. If you did have your stop on the extreme of that supply zone, you would have been taken out. You could have even gotten on a confirmation order by here. If you went onto the 1-minute chart, you'll see that price has broken down, and you could have got in but there on an even larger position. Obviously, they are higher risk, but they do have much higher reward as well. So I do recommend risking lower amounts if you are going to be doing confirmation orders. So price has broken this low, and this has now printed this as the last high. So we know that price is likely to continue downwards and not come above this region. And sorry, I must just rewind this tool just a second. So once we get into spread hours, guys, now this starts at about 9 p.m. GMT. Now that is basically where banks and institutional traders will actually close out of their trades for the night, just so they can go home and get some rest. So this is where volume massively decreases on a chart or any market, in the Forex markets though. But this is where we can start to disregard price action simply because there's not going to be any volume behind it, which means less orders, which means less retests, and also basically price is irrelevant at this time. So if we do go back before this region, just mark out 9 o'clock there, we can see that price didn't actually break this low by here. It wicked, so we would have still kept this by here, and then it did come to break that, and then again by here. So this is the last low. This would have been the last high. And spread hours, guys, lasts until 11 p.m. GMT. So if we put a little indicator there, we can disregard any price action that happens before then. We know that even though this high has been broken, price is actually likely to continue trending downwards. Like so. So that is the last low, and we're going to wait for price to reverse. There we go. So we've got a new low that's been imprinted here, and this becomes our last high, which, as this is the start of the Asian session, we know that it's likely to get swept. So we're not going to place any orders around here. Some people will actually place a supply zone by here on this candle, which normally would be a good place, but as it happened during spread hours, we know to disregard that because we know that there is a lack of orders in this region of the market. Now, if we come back, guys, just before we continue downwards with price action, we can see this imbalance by here. Now, even though we'd still technically be in a trade on this, so we would currently be running at about 11R right now. So you'll see how profitable this way of trading is, but you can actually see that there is an imbalance by here. I'll actually turn my imbalance indicator on just so you can see. You can see that there's imbalance by here. You can tell this by the wick of the last candle not touching the wick of the candle before the last. I know that's a bit of a complex way of saying it, but that's how this indicator works. We know, if you did watch our last video, that price is likely to come back and retest this region. Now, it's good to have our zone here, not only because you've got this unmitigated imbalance, but you've also got this. Now, what is this, guys? These are equal highs. This is manipulated by banks to entice traders into the wrong side of the market. So basically, layman's terms, you're going to have traders where if price does come up to this region, they're going to be placing their orders by here to go short, and they are going to get swept, guys, because the banks will use their orders to fulfill their own, which are actually still at this region up here. So if we just leave this order block there, I'll just get rid of these. I'm not sure why I even had one set, but there. So it's between 9 o'clock and 11 p.m. spread hours, guys. But we're going to wait for price to sweep downwards. We can actually see that price almost came down to mitigate this imbalance, but it is Asia session, so it is actually low volume. And price does create and print a new low. So this is the last low. And my bad. And this is going to be the last high. So if price breaks here, guys, it's going to allow us to say with high probability confirmation that price and order flow has reversed and it'll start trending upwards. And the same with this. This is now a new low and this is now a new high. And we're going to wait. So I'm going to draw a demand zone here just because it's an extreme point with unmitigated imbalance above it. This is Asia low, so we know that price is sometimes likely to sweep. So if we were going to be trading this, we would wait for confirmation rather than a risk order. And price is going to hopefully come up, sweep this, and come in to our demand zone, which we are going to set another order 2 pips above there. You'll see how profitable this is, guys, in a second. And there we go. We've already got a massive retest. Obviously, you would have wanted to close out this trade. You would have had, obviously, plenty of time to close this trade out. Obviously, I would have been asleep for most of this, but you can obviously set targets. So, for example, this has come down into this region by here, and you could have set your target there, and it would have automatically taken your profits when you're sleeping, and you could have waken up to some lovely profits. And prices come down. Now, as we are getting later on in the evening, if you hadn't closed out by here, it's going to be coming into spread hours, and you're going to want to not have your stop break even, just because during spread hours, your spread will actually mean price is going to be higher. To be honest with you, you may have been tagged out of that, but this is just an example, guys. This is how price works. And we'll see if price does actually come down, and it'll continue its order flow downwards. So once all imbalance has been mitigated, price should actually come and continue down on its previous order flow. So now that we know that order flow is going to continue trending downwards, we can see that this is the Asian low. We'll mark that by here. So this is 8 o'clock in the morning. Well, it's actually this candle by here. This is the last low. We know that it's likely to get swept. It hasn't been swept just yet. And now it has. We can see this imbalance has been created here. And what we can then do is place an order by here. Now, you can either place a risk order or a confirmation order at this point. I'm going to place a risk order. We're going to do it 2 pips above. And we're going to wait. Price would have come back in to tag us in. And it continues moving downwards. And we know from order flow, that is the last low. This is the last high. And we know that price is likely to not come above this region. So our stop is now protected. So price has started moving again. And what I'm going to do, guys, if we come back to this region in the chart, you'll know that I have identified this supply zone earlier. And this is also the 4-hour low as well. So not only do we know that price is likely to break this at some point, but we do know that there is orders potentially going to be here for price to actually start going upwards. So the 4-hour chart, the order flow doesn't have to continue going downwards straight away. We know that price is likely to react, so we can actually have an order set here. And if we do see signs of manipulation, which I'll point out in a second, then we have more of an inclination to set an order here. At this point, we're running at about 8.26R on this trade. We would have potentially locked in above this high by here. And what's this, guys? You can see that there is manipulation here. Now, why do I say that? You've basically got these double bottoms. So again, you've got these retail traders placing their orders on this side of the market, and they are going to get swept because their orders act as liquidity that help banks push price down towards their regions. So what are we going to do? We're going to place our orders with theirs, and we are going to set our stop 2 pips below there. Now, I don't know if this is going to tag or not, guys. I think I did get into a trade at this region in the past, but you'll see that we have got a tag. And now the good thing about this, guys, is we have as we've got a good clue that there is going to be orders in these regions of the market, it does allow us to get a reaction, which then allows us in turn to reduce our stops. So once price is broken down like this, you can move your stops break even. And again, by here, once, to be honest, I wouldn't actually put my stop break even until we did get a break of structure to the upside, like there, and I'd be currently locked in break even. This way, guys, you're actually hedged. You could still be in this trade and this trade at the same time, and depending on what price does, you may get taken out of one trade in profit. So say you have your stop, but there you would have got taken out of this in profit, and this trade continues upwards. Just moving into the end of the video now, I will do one more example, guys. So if we go back to here, obviously these trades are taken out in profit as we speak, and we've got this low by here, or sorry, high by here, and this would have been the last low, and price breaks up. So we've now got positive order flow. So once we've got this, we can go back to areas of imbalance such as this. We can see that there's imbalance by here. We can turn our indicator on, and we can see that that's been left unmitigated. So we can actually put an order by here, and we can move it over to this side of the chart. Price is broken down. Obviously, we've got into spread hours. Prices started trending back downwards. We've got this liquidity built up by here, which we know price likes to sweep. We've also got the Asian session building up by here. So we can now have a order set by here on this demand zone. Now, if you we're trading with me, guys, in my Discord, you'll know that I actually entered in the market on this region just because we saw this massive volatility. I did have an order set by here, which you'll see that it does get tagged in a second, but I actually was in the market before this. I had both 2 orders set just to account for this demand zone by here. I did get taken out of both. I took a hedge short and a hedge long in this position. You'll know that there was a massive amount of volume from the news events going on this day. So I had a hedge position, taken out in break even. So I didn't actually lose anything. We did get tagged into this trade. We can see that price tagged. And as usual, I'll just keep that to red for now. This is the last high. This is the low. So we know that our stops are technically protected in this instance, and price is likely to come up and go above this high. So that is the end of the video, guys. What did we learn today? We learned how to identify market structure with highs and lows, and also to identify order flow. Once the order flow is identified, we know that price is likely to come back to mitigate regions that have been left unfulfilled. And then it is likely to continue on the same path. So just by here, you can see that order flow was positive, came back, mitigated all imbalance, continued upwards. Now this happens over and over again. Obviously, this chart doesn't look the same, but these same sort of pillars of the market, I call them, they play out in almost every instance you look at. Obviously, you do need to have an efficient market, so I use the Euro USD as it is a very efficient market where price is likely to come back to retest previous regions. Other pairs aren't so as efficient, so you'll find that imbalance doesn't get filled as much, which can actually be utilized in a beneficial way, which I will cover in a future video for my community that do trade other pairs. But the Euro USD is a beautiful pair to trade, which is why it is one of the sole pairs that I do actually trade. So that's it for me, guys. I will catch you guys in the next video where I will go into more depth about other methods such as order blocks. And you can follow me on Instagram where I do put out educational content. And if you did want to join my community Discord, you will see that I put live analysis of my trades in there as well. I'll catch you guys in a bit. Peace out.